All right. So welcome everybody to Enhancing the Accountant Bookkeeper Connection series featuring Jonathan Carter from KATA Accounting. So hello. Most of you guys know me, but I'm Tanya Hiltz. I'm a CPB, which is Certified Professional Bookkeeper. Newly in FCPB, which means I've been given awarded fellow designation through CPB and an AIA for accredited impactful advisor. And I'm here because I'm passionate about collaboration. And you can find me at Tanya's Bootcamp on pretty much any social platform. A little bit about myself, my industry designations, industry accolades, recent business accolades, and current committee member still on a couple of CPB Canada committees. You guys can take a look at that. I know people keep saying own it, but I'm just not that comfortable owning. So there we are. Communication sometimes is not what you first hear. Listen, listen, not just to the words, but listen for the reason. And that quote was by Catherine Pulsifier, and this pulls in, and she's an author and a reporter, but this pulls into exactly our topic today. Just to confirm, this webinar does qualify for CPD credits through, it's actually not just through CPB Canada, but through, it does hit everything that needs to be for all of the Canada and US, but CPB Canada, we got advanced approval. There will be 2 polls that must both be answered in order to qualify for your credits. If you're having an issue with the poll, make sure that you give me the answer through chat so that I can make note of that. And then a recording of the webinar, and your credits, if you've earned them, will be emailed by the weekend at the latest. Important, if you don't get the recording and the CPD credits, let me know. If you don't have it by the weekend, let's say Saturday the latest, it could be that you potentially unsubscribed, or so check your spam first. If it's not in there, it could be potentially that you've unsubscribed. So here's the steps to go through to resubscribe. Go to our website, click to enter your email address. You will then receive within a couple of minutes a verification. So it's a two-step verification. Once you do that, email me so that we know you're back in, that you've resubscribed, and to please resend your recordings and your CPD credits. And don't unsubscribe again unless you don't want to hear from us ever, or you're going to have to repeat this process. And here is my friend, my accountant, my collaborator, Jonathan Carter. We've been collaborating with Jonathan and his team for a number of years. We've got multiple mutual clients. What we love about Jonathan is they work in QBO and understand QBO in a way that, that accountants that don't work in it daily understand it at a different level, which does make things a lot easier to go back and forth because we are a QB only firm. They attention to detail, great outstanding customer service, and Jonathan's just awesome. Like I say, he's my friend, he's my accountant, he's my collaborator, he's my everything. And he has made me definitely a better bookkeeper and made our firm better in processes. And that rolls down to people in Bootcamp and you guys here. So yeah, Jonathan is definitely doing all he can to help the industry and to help it. I am going to stop here, and Jonathan, you can take it away.
Well, thank you. Yes, it's amazing how much collaboration helps both sides. Like every time I'm having conversations, one-on-one conversations with the processes, I'm finding, maybe not every time, but a lot of the time, how can we continually get better in the way we work together? And, it's just, I'm grateful for these relationships, so grateful for these relationships. So Steve did ask about my background. This background, I had a lot of fun with today's presentation, but there will be some spooky ones. So there's a bit of a disclaimer. So I'm Jonathan Carter, founder of KATA Accounting Solutions Professional Corporation, member of the inaugural Intuit Accountants Council in Canada. I've done a lot of work with Intuit over the years, and they've just been very, very supportive of our development as a business. Was the Inspire Accountant Award winner, and in September, just so grateful to be honored as CPB Canada Firm of the Year. We're Elite ProAdvisors, QBO Advanced Certified. We've made the top 100 ProAdvisor list for the last 3 years. And I do work with a lot of different bookkeeping firms, and I really do enjoy working with bookkeeping firms. We like working with technology as well, and are often considered a thought leader in that realm, though I think that's tailing off a bit. I'm not as shiny new object as I used to be. So today we're talking about the Book of Nightmares. Crazy stories that I'm sure we've all had throughout our careers, and so there are some scary images. All of these images were actually created by one of our teammates using royalty-free images that they found. So as a disclaimer, there's some spooky pictures. If it freaks you out, if you have a fear of clowns especially, be wary. You might want to look away or minimize and just listen or whatever. These are my views and the views of whoever is speaking. These are not the views of Tanya and her Bootcamp. So just a little bit of a disclaimer there. So these are some of the nightmares that we've seen, that we've done. And Tanya and I'm sure have some stories about some of these, but please, as we go on, I invite people to jump in and tell their stories and the nightmares, or ask questions about different situations. So blind quotes, just to sum it up, don't do them. When somebody asks how much to do my bookkeeping, I say, well, with no other information, I say $1 million a month. What do you think of that? And that usually changes the conversation in a hurry. Equal partnerships, they seem like a good idea. They almost never are. Too many cooks in the kitchen. Cookbooks and nightmare clients. And then, of course, we'll have some discussion period at the end. Now, my wife, who some of you know, she is a coach in mindset. She's a certified hypnotherapist. She's really big on mindset. And she walked by while I was preparing this presentation, was like, you guys can't keep talking about the bad. You have to talk about the good, because if you keep talking about the bad, you're going to attract more of the bad. So in that instance, in that spirit, with today, what we're going to be really talking about is how to avoid the bad, avoid the nightmares. So let's
what did we
right
learn from it? Exactly. What did we learn from that? Because every single thing that we do, we can learn to make it better for next time.
Yep.
Okay.
So let's get on with poll question number 1. Now we are going to make all panelists able to vote.
No, it just
Not yet.
And it's funny when I allow panelists to vote. There we go. Okay, so let's try this again. Relaunch poll. Okay.
That's poll 2 though.
Oh. Thank you. And poll. Edit. Ugh. No, where did it go? Poll 1.
It was there, then it went away.
It was still poll 2.
Yeah, it was poll 2. Okay. So launch.
There we are.
Okay, panelists can vote. Yay.
Yeah, I'm going to move this off so people can't see my vote, because I'm sharing that screen.
Actually, I can't see. We can't see it anyway.
Oh, really? Okay.
Yeah. Changing your answer, Steve, or just having flashbacks? PTSD
No, I just,
flashbacks.
as I was reading through them, and I was okay, and then I got to number 4, and I went, okay, yeah.
Oh, that's the thing. We just the books are great. Yes, they're great.
Everything's in good order. All my bookkeeping's in place.
And why are you going to charge me so much to fix them?
Yeah.
Because they're already in such good shape. Yes.
Yes. All right. So everybody's voted. So we're going to end the poll and share the results.
DIY books made number 1.
Yep.
Okay.
Yep. Totally. I mean, but I think we hear that from everybody. You know, I've
Yep.
heard it twice in the last week. And, you know, one from, you know, somebody says, oh, well, this is what the client said. And we're helping them price. And it's like, yeah, that was actually on our bootcamp call on Friday, helping somebody price. He's like, well, here's what the client said. And there was probably about 4 or 5 of us that just laughed. We're like, okay, yeah, you'll get that.
So I thought this was a good quote from Ronald Reagan. And it's something that we have to do especially when we're vetting a new client, is don't be afraid to see what you see. When you see a problem, bring up the problem, speak truth to power. If you're afraid in that conversation, there's probably a good reason for you to get out of that conversation. So I thought it was good. So again, our royalty-free images. So blind quotes, very dangerous. 100%, almost 100% guarantee that you're going to have scope creep. The person is almost always a price shopper because that's the question they're focused on asking. How much is it going to cost me? How much is it going to cost me? How much is it going to cost me? And they probably still always want top level service for cut rate prices, and they want it done yesterday, right? It's often a symptom of somebody who doesn't value bookkeeping, so they can often be a problem in the future. I say just don't do them. If somebody is insistent on a blind quote, I'm just going to say, listen, we're not a good fit for each other. I'm sure there are lots of bookkeepers out there who can help. And when they ask for a recommendation, I just pretty much tell them, it's like, nobody in my network is going to give you a blind quote without knowing what they're getting into.
But Jonathan, when I get those, I just refer them to you. So,
oh, thanks, Steve. No, I've never seen that.
Well, you know what's funny?
It's like how to was it lose friends and alienate people? Like,
well, and you know it's funny when you said that blind quotes, like quotes, don't do it. So I'm going back to the 90s. It's a Duran Duran song that they actually did at their concert that I was just at, but it's that white lines don't do it, right? Blind quotes, don't do it. There's a song.
yeah.
Yeah.
So yeah, has anybody here ever had an experience with a blind quote that has worked out well?
Yeah, well, that's I
don't do them, period.
Yeah, I was gonna say your diagnostics. Carol does paid diagnostics.
Yeah, that's I like that approach.
Now,
and
having said that, I used to just quote, and I used to do hourly. And I had a client that, well, sadly, I am kicking that client to the curb now after 4 years, but he didn't want a quote. He wanted an hourly rate. So I gave him, at that time, I was charging $75 an hour. And as I was doing the cleanup from his previous bookkeeper, at one point, he finally said to me, he goes, this is getting really expensive. Are you done yet? I said, well, I'm upfront and transparent with all that I'm doing and everything that still has to be done. He goes, I know, but we're close to 30,000 at the moment. I said, yes, we are. And that's all I said. Well, because it was true. It was a gong show. She had no idea what she was doing. It was insane, the stuff I had to clean up. It was just very lucrative for me, but I felt bad for him, but I wasn't going to do it for anything cheaper.
Yeah, I don't blame you at all. And I
didn't charge for all my hours. And I said to him at one point, I said, you know, if I charge you for every hour I thought of your account, the price would be double.
Yeah. Yeah. They often can end up being very scary situations. I've made this mistake in the past. I don't think I've done a blind quote since about 2016, I'd say. I'm sure some people have done them in the past. No stories to share. I'm impressed. Oh, yeah. Tanya's hopping on. Tanya's on mute.
So I'll just go a little bit of a step further is don't quote based on the fact that you don't want them. The saying no is better to do.
Better than
if you quote them and you're like, oh, I'll just quote them until they go away. Guess what? That's not going to solve the problem. You're just going to dig in and you're going to find there's more. And I did that at one point for a renewal, and I doubled their price. Guess what? They took it and they became double a pain in the ass. So just say no. Like it's okay to say no and do it. Yeah. Just say no.
I think most of us got into business because we like helping people and we want to help everybody everybody, and that conflicts with saying no sometimes.
It does, but we need to remember saying no. Business owners can say no easier.
Yeah.
We are doing it as a business, not as a hobby.
Correct. Yeah. And not as an employee where we have to do, our job is on the line, our source of income is on the line.
Yeah.
All right, let's hop on to the next one. So this one is the background I'm using today. The equal partnerships. We've seen this a ton in corporations. It is a terrible idea. We have seen, commonly two friends or partners create a 50-50 share structure. Both are directors and everything is beautiful. What could go wrong? Almost certainly there will be disagreements about how to run the company. Could be strategic differences, different levels of contribution, life happening, or other conflicts. But regardless, what can often happen is a stagnation of business processes, of moving things forward, especially if the two partners are providing conflicting information to their team. It can create confusion. It damages morale within the company, and it can result in us not knowing who to listen to or things along those lines. Steve, what's up?
Jonathan, what we've done in the past is we've insisted anytime we put together the businesses for them on partnerships or even corporations, a minimum 51-49 split. Have you done that? So at least then you can see like they're equal partners sort of, but one has
somebody has control.
Is that how you would work through that?
That's a possibility, but quite often when these come to us, they've already done their incorporation. They're already in a 50-50 share structure. And what we suggest doing is creating one super voting share for a tiebreaker. You can do that, or you can put in some other kind of mechanism to help break ties. The challenge is how that works. So let's say you have a husband and wife on one side, husband owns 50% of a company, another husband and wife on this side, that husband owns 50% of the company. The one wants his wife to be the tie-breaking vote. And the other wants his wife to be the tie-breaking vote. And once that 50-50 structure is already established, it can just be a nightmare. When we're working with our clients, we have to have an authority. We have to have a clear reporting structure. Who are we answering to? Alan, are you trying to say something? Because you're on mute, but I see. No, okay. I saw your lips moving a little there. So to tell a couple of quick stories, story about getting fired. There was a client who had a 50-50 share structure. One partner in this corporation had taken a second mortgage on their home. They'd injected about $250,000 into the company to help keep it running, keep operations going. And the other partner owed the corporation about $200,000. So essentially, the partner who refinanced his own home and put that money into the corporation, the other partner was just taking that money and using it to pay for his lifestyle. Well, we brought that up, and what do you think happened? See you later. We got fired for that. Happy to walk away from that situation. Not upset by that at all. We had another situation where we had a 50-50 partnership, and they moved to make some structural changes in the company ownerships. And they had to, of course, come up with a price. But during that period in time, there was a lot of confusion amongst the staff of that company as to who they were reporting to. So one person would say this, and then one person would say, no, do this. And so staff were kind of like running back and forth and trying to figure stuff out. During this process, they were trying to sell the company. It's really hard to provide an exact figure of what eroded, but I'm confident that it eroded at least 7 figures of value from their sale price, just because this happened, and it went on for about 18 months. We currently have a situation where we're dealing with another 50-50 partnership, where one person came into the company as a doer. He can do the work. The other person can run the company, source the business, take care of all the administrative stuff, and also do the work. So their contributions are really lopsided. Well, now they're trying to restructure, but of course now there's lawyers involved. They want a valuation, and this is a company that's coming from a place of like, we'll just give everything to the accountant at year end and they can deal with it then. Well, when you're in the middle of the year and you're trying to come up with a valuation and you're trying to figure out how you're going to have this exit, that creates a big headache. Has anybody else experienced the 50-50 partnership blowing up in their face?
Oh, yeah.
All right, Karen.
I had one where the 50-50 partner were brothers-in-law. I was hired by the wife of one of them, who was a CPA. That should have been my first clue. But they were so disparate that they actually, the company just kind of fell apart.
Imploded.
Yeah, literally imploded.
Yeah.
So I didn't have to do anything with them, but it was quite funny.
We're going to see that more and more with 50-50 partnerships and with people who don't have a succession plan, and they fall ill and the company just disintegrates because they've lost their leader, even if the leader is not a good leader.
Or if they don't have a good business plan. I've seen that happen so often, it's scary.
Yeah, very true. Or they're like used to operating at one level, and really to take it to that level of an exit, the company needs to go from the owner having their fingers and everything to the owner being out, acting as like the chairperson of the board, and that's about it.
It's true of us too.
Yeah,
we have to have a succession plan ourselves.
Absolutely. And actually, let's just talk on that for a quick minute. You know, it is possible that we need to consider, how are things going to work should something terrible happen to us? Who's going to take over and run the operation so people don't lose their jobs, so you don't end up with, you know, lawsuits from clients or from staff who aren't getting paid and things aren't being done? And then also, what happens with those shares and the capital gains that could trigger? So these are all important considerations. That's actually a really good plan. I'm going to just take note of that. Maybe we'll have a session on succession planning later in the year. Or
that'd be a good one.
I think it would be. Yeah. I saw Tanya had her hand raised.
I do. Now I want to hit a different type of partnership thought process. And if this is going to be something that's going to come up later, then just let me know and I'll stop. But if we enter a business relationship, that actually I've got one going on right now, and it's going to work out well because of things that I've done, whereas it hasn't in the past. Somebody said, hey, I'm going to do your roof. You do my bookkeeping for X number of dollars, you know, X number of years, whatever. So what you're going into with a client as a 50-50 partnership as a trade of services, don't do it. Don't do it. Still issue the invoice, you know, have the agreement, have that, this is what, you know, you've got separate agreements, issue the invoice. You can then just kind of like, you know, clear it out as like move it over to as paid by shareholders, you know, or cash on hand if you want, and then pay theirs by that. So there's other ways to do that, but 100% of the time they are not going to value your services the same way that they value theirs. And by doing that, you're not allowing for scope creep happens and whatnot. So right now I am working with somebody. She's giving me marketing services. I'm giving her bookkeeping services, but we are going into an official agreement as to here's the value of each of the services. And if it changes, that's going to change, you know, change the scope of work. It's going to change the way the pricing is, but we're actually going to price that and do that. So like I say, different type of partnership, but that has burnt me in the past because 100% of the time they feel they're giving me more value than they're getting because we don't have that and they don't see what's going on.
Yeah, that's a really good point. And I like that you brought that up in that way. The papering a deal is very important. Handshake deals are like, they just scare the heck out of me. It's like, you need to have governing documents. You need to have shareholder agreements. You need to have contracts. And these barter type transactions, these are taxable still. So you need to be charging HST. And even if you're not collecting the payment, you need to pay that HST. Even if you're not collecting the payment, you have to pay income tax on that income.
Yeah. And so
you can declare the expense.
what we're doing is right now our invoices are exactly the same. So it's going to offset each other, but we're still giving each other invoices. We're still keeping to the agreement of the scope of work. And if that changes, we're going to go back to the table and say, okay, the scope of work has changed on one or the other. Are we going to change this on both sides and therefore change the agreement and whatnot? And like I say, we're just not actually going to pay money back and forth. We're just going to pay it from, pay one for it's just, but yes, having that a proper process and still a proper scope of work will protect. Absolutely.
Carol,
you had something like it looked like you wanted to say a minute ago, and
I was just going to say, I worked for, I still have the client, but originally they were a partnership, and I had been working there a number of years. They were like friends from high school. They started their own business really early in life. They, built this business for a long, long time. And at one point we moved from Coquitlam to Maple Ridge, and then the one partner, and they'd each done it off and on, where they were building a house or renovating condos, whatever. So they would move into one of the sort of areas of the building that they were renting while renovations were going on. So the one partner was renovating his condo. So he moved in, and I was downstairs, but I would be, there was offices upstairs, kitchen downstairs, blah, blah, blah. And all I could see was this guy coming out of his, house, at 8 or 9 in the morning, and he'd have the paper and he'd have his coffee. He literally wouldn't start working until like 11 o'clock. And these guys were equal partners, apparently. And it went on for months. And I didn't know what to do, because I could just see how the other guy was working so hard, like all the time, like he was gone working all the time. So I really kind of stuck my neck out a bit. And I said to him, I said, I'm not trying to be a tattletale, and I don't want to get in trouble, but I really feel that I need to say something. I said, you guys are both partners, and you're apparently supposed to be working 50-50, but this is what I see.
Yep.
And the look on his face, he was just like, he goes, well, I thought maybe just the area he was working in, it was hard for him to find sales these days. And I said, you didn't hear from me. That's all I'm saying. And if you need to fire me, go ahead. He goes, no, I appreciate it. So he ended up pulling the shotgun trigger on their agreement and bought him out and just got rid of him. Because
good thing they had a shotgun clause.
They had a shotgun clause, and he used it. I mean, it took a while. He didn't do it like that day, but he prepared for it, because he was just working like all the time. And this other guy was just, and even at some point where I had to say, like, he really needs to wear proper attire when I know he's not working and he's walking around the office, but sweaty sweatpants that have holes are not appropriate for the office. But it was just one of those awkward situations where I tried to be as diplomatic as possible without possibly lose. And I was a contractor, so I could have lost my job. There would be no grounds for, employment retention. But I've been with him now for 26 years. I still have him as a client. He's got multiple different businesses going on. He's always got something. And at one point he had like 7 businesses going. So I'm glad I did what I did, because it was for his benefit, which also ended up benefiting me. But it was scary and sticking my neck out. But I just, again, as we're trying to be so helpful and helping people, I felt bad for him that he was literally getting railroaded by this guy not doing his 50-50 share.
Yeah,
Well,
absolutely.
And just sorry to add to that, that just made me think of there's somebody within our community that, and I'm not going to mention any names, so don't ask, but they went into an agreement with a client, and kind of it was like a partnership agreement. So this person, rather than doing the bookkeeping services, came in as a partnership. They did a handshake deal. Now, this guy who owns the building, and part of that was supposed to cover their rent. She put money into, making the office really nice and whatnot. And now he has upended, put the building up for sale. Now she's got to worry about all this stuff because she did not, again, have a proper agreement in place and she was supposed to come in. She was helping with a lot of stuff in the books and finance and whatever, and was supposed to be coming in with a share structure. And it just kind of kept going and going. No proper agreement. Now she's got to take him to court. She's got to try to figure all this stuff out because she did not have a proper agreement.
That's so
Who
sad.
gets paid? The lawyers.
Yeah.
Well, but it's sad because you want to trust people at face value, but at the same time, and I've learned this over the years, trust no one. You have an agreement and you trust no one.
Good fences, good neighbors.
Yeah.
Trust me. Yeah, that's usually a sign that you need it right there, right?
But the thing is when I say it, it is true.
Yeah.
It isn't true for a lot of people, unfortunately.
Well, that's part of the issue is like there's a saying from security: if it wasn't written down, it didn't happen. And as we know, victors write the history books. So it is really it puts a lot more emphasis on the power of having agreements in place, written, these plans thought out in advance, and so on. Yeah. So this is one of my favorite backgrounds. This is how I feel during tax season. Too many cooks in the kitchen. Often a challenge that we have. We have to have clear reporting structures. We have to have clear processes. The company needs them to be successful, to have the business run smoothly. And you know what? A lot of the clients, especially the micro and the small businesses, they need help here. So one thing that we've really used to great effect is in-person training. So it'd be myself, the lead bookkeeper on the file, and the client discussing processes. If they have somebody who's reporting to them, who's involved in these processes, they're on the call, and we make things nice and clear, and we get it usually in just a very simple flow chart for them. And it's usually like, take a picture, make sure it's clear, and hit send and submit. You know, it's really, it's not that rocket science, but creating those things and having those procedures in place, and they have to be unique for every client. Some clients, the one person show, they send something and it's approved, you can queue it for payment, no problem. But others, you know, maybe there needs a manager to approve or multiple people to approve. This just kind of naturally falls out of that, why 50-50 partnerships are bad from an ownership perspective. But from a business operations perspective, too many cooks in the kitchen can really screw stuff up. Does anybody have any stories about anything that's happened in this realm? All right. Oh, I see a couple off mute. Go ahead, Steve.
Oh, no. Let's go with Karen.
Let's go with Karen. Okay.
Well, yeah. There's our processes, but there's also dealing with clients who have too many cooks in their own. And this goes with the partnership thing too. We used to share an office with a client. Rule number one, we don't do that anymore under any circumstances. They lived in a state of chaos. The person who was supposed to interact with us and do the work for us, with us, or send the work to us, had no idea about any kind of organization whatsoever. It was terrifying. So we lived in this shower of paper, and I did change it back to paper because they weren't even able to cope with Dex. They couldn't handle Dex at all. So I ended up firing them. That was in the middle of COVID. I ended up firing them. And now we're in a different office.
Yeah.
So it's not just our reporting structures. They're super important, but it's also dealing with the client that doesn't have any kind of organization or knowledge in the background. That's a problem.
And I mean, there's realms that we can definitely pitch in and provide ideas and whatnot, but in the end, it is their decisions.
Exactly.
You know, could be things like, you know, hey, in your sales process, make sure you do a credit check on the company you're selling to. Make sure that before those goods ship out the door, you know you're going to get paid, or there's a high likelihood of getting paid. You know, or it could be something. Sorry, go on, Karen.
Or set a budget for your hours, for the hours of your staff.
Yeah.
That was a major problem they had. So they ended up eating an awful lot of, they left a lot of money on the table.
Time theft.
Yeah. Pardon? No, it
Time
wasn't time
theft?
theft. And it wasn't time theft. It was just that the employees were trying to do a very good job, but the reality was that they got a little bit too deep into it.
Yes, that can be a
Yeah.
thing. I had to have that conversation with one of our team members the other day who was obsessing over 2 cents. It's like,
We all
let
do
it
that.
go. Put it in reconciliation discrepancies. I can live with that. Okay? Literally 2 cents.
I'm still obsessing about one from 20 years ago.
Jeez.
Yes, I know.
Steve, you had something to mention.
Yeah, no, and he just, mine was $2. She spent, my God, she spent 4 hours trying to find it. I'm like, what the hell? Like, what, why? And this is in, on a revenue of a couple $100,000. It does not matter. Don't do it. So she wrote up a really nice paragraph, though, that she sent out to our managers and me about this thing. And I'm like, well, okay, the worst thing was that you did it and you spent the time on it. Second, why are you wasting my time with it? So
Reading this, yeah.
it was an oops. So correct. I was just going to bring up with when you say the cooks, what we found is even going into small companies when they have say 3 or 4 people that are involved, we do a little organization chart for them. Just okay,
nice. I like that.
boss, here you go. Just a little picture on it. We have one for ourselves, so why not for them? And then for us, we give it to all of our new staff. So we have, I think there's 4 part-time staff and 3 full-time. So it's a very small organization. But then we have my partner too, and then we've got a quasi board that kind of yells at us every so often. That's kind of fun to have just for guidance. But it shows very specifically in pictorial format. Okay, I understand where I fit in, and and then for the clients, I think it helps them to realize, okay, you guys brought in X amount of money, you brought in skills, but this means that you're actually the one that sets the direction for the organization. Just found it kind of helpful in that regard. So it's just something we play with.
That's a great idea. I mean, not just org charts, but even like flow charts between how, big invoices are approved or things like that. We're trying to convince a client who currently has, let's just say, a small 10 figures under management. And they're like, still the founder of the organization is still approving anything over $500. And it's like, it's no wonder you're 2 months behind on your payables. Like, his time is way too valuable to be spent. So having those conversations is another way we can help our clients. All right, moving on, because our time is ticking down. QuickBooks. Anybody encounter this? So you understand what you're willing to put up with. Consider your personal code of ethics as well as your professional code of conduct. Consider your potential liability, including potential criminal liability, and keep in mind what kind of web you could be falling into. Were mistakes made, or are the books misleading? Is there something false going on? Are they trying to cheat, embezzle, defraud? Is there something terrible going on, or is this just they messed it up going on? So my biggest experience with QuickBooks was coming in post-acquisition to a company as the new bookkeeper. And on day one, I found 2 QuickBooks desktop files. The one that had been used to create the notice to reader statements based upon which the purchase decision was made. And then another set of books that actually showed where the money was going and why. And what I found was the previous bookkeeper had also been a recruiter for this business and had paid herself, her husband, and her 2 children who were under 18 years of age over $250,000 over the last 2 years that I found. What's worse is the owner did not want any negative attention, so he refused to report it to the police. in the end, let's just say we no longer work with that client. We're very happy to be out of that situation. That client actually came back around like okay, I'll give the broad stroke. So our client purchased the business, mismanaged the business. It was disaster, like not paying source deductions, not paying HST, ending up in serious trouble. Had to sell the assets of the business back to the previous owner, who essentially made money on the sell and then bought it back at a discount. And all the liability was now on this previous owner who got kind of stuck in the middle. Well, that guy approached us, and as soon as we realized who it was like, no, I'm sorry. We had too much conflict, and there's too much that scared us with regards to potential liability and potential mismanagement and potentially illegal acts going on in your company. We don't want to quote on you. We don't want to work with you. And he just said, well, thanks for being upfront about that. I guess I'll move on. And that was it. There was no yelling. There was no screaming. And this guy was famous for that. So has anybody else encountered QuickBooks? Lynn has. Lynn, are you willing to share a little? Without names, of course.
Oh yeah.
Okay.
I did a discovery on this guy. Actually, he approached me one year. I was away on holidays and I happened to pick up my phone. Duh. And I said, yeah, I'll talk to you when I get back in the office. So I did. I reached out to him and he talked to me and I explained some stuff to him at the time. And he said, yeah, well, he'll think about it and get in touch with me. And a year went by, I never heard from him. Then all out of the blue, I hear again. So I said, well, I don't do anything without doing a discovery first. So we did the discovery and she paid for it. And in the process of doing it, I'm trying to figure out how this company is still in business, because there's not enough revenue, but his shareholders loan grew from a modest something under 100K to up over 1.5 million. And yet I'm not seeing money coming in, and he's paying all this stuff through his own shareholders loan and his own personal funds, but yet he's not taking a wage. And I'm going, there's too many questions here. And I went back and said, no, I don't think I can help you with this. He wanted a whole brand new setup done so he could start over. And it's like, no, I don't think so. And
So
I passed on it. And then he wanted me to talk to the new bookkeeper who I talked to. And she said, well, she was doing the books for an associated company. Okay, so as it turns out, that company was feeding this company, and I'm thinking, okay, yep, I can't help you.
Yeah, I've seen some definite erosion of shareholder value through intercompany loans by one controlling shareholder who essentially can fund a completely different company, by eroding the assets of one of the companies.
I don't know whether he was actually doing that or trying to minimize the revenue in the other company, because I never saw the books of the other company. And it's like, no, I just walked away.
That's probably your best bet.
It's
Probably the best thing you could have done.
Yeah.
So just to kind of go over some of the common things that we've seen in that scenario, especially, what is often happening is revenue is coming in and is going to another account. So construction is notorious for this. They get a cash payment, they put it in their pocket, put it in their safe, whatever, and then they never send that invoice to the customer. And so that revenue is never reported. That's why monitoring margin in the construction industry is extremely important. CRA knows that you can't survive on a 5% margin. Your company can't lose money forever and stay in business, right? So these are kind of things that can set off red flags.
My biggest
Another
red flag-
is,
sorry.
I was just going to say, to wrap up that comment, another that I've seen is the owner issuing the invoice, getting paid in cash, and then having the invoice written off as bad debt. Sorry.
Yeah.
What were you going to say, Carol?
Oh, I was just gonna say, I was doing books for a company and I couldn't get access to the bank statements. So it kind of, there was one bank account had access, had the statements, other bank account couldn't get access to the statements, but I know money was going in there because it was showing up in QBO, but I couldn't get the statements in order to reconcile. So it went on for a few months, and then it was, oh, we closed that account. I said, okay, well, I still have to reconcile it. Anyways, long story short, they ended up taking the bookkeeping back in-house. And it wasn't until a few months later when I ran into the person, I was talking to them, that she said that the bank had actually shut their account down due to not understanding the activity in the account. So I know it was just a lot of cash money going in and out. I don't know what it was, but I could never get access to it. So when she said that she wanted to have the books back, I just said, yeah, nope, sure, no problem. I didn't ask, I didn't care. I just didn't want to be a part of whatever it was that was going on. It's completely legit business, but there was something else that was not quite. I don't, whether it was just not understanding how that should be done or whatever, but I was just glad to wash my hands of it, because I don't want to be a part of anything that anybody's doing that's not 100% above board, period, end of story, full stop.
Couple other things that I've seen suspicious activity in, and we kind of give clients one chance, and they get a warning, and if there's more suspicious activity, we're washing our hands and walking away, because I don't want to be involved with that. I don't ever want to have to testify in court again. I don't ever want to have to, be interviewed by the police or by CRA about something like that. So I would rather not deal with that. So we talked about the 2 sets of books. We've talked about owner embezzlement, or it can also happen from salespeople, especially in situations where sales tend to be one-off and not repeat customers, where the salesperson will get paid in cash and never report that to the owner. Bookkeepers can be a really big source of fraud and embezzlement, accounts payable staff, in payroll staff, in creating false employees, false vendors, and then redirecting company funds to themselves those ways. Is there anything else that anybody any war stories anybody else wants to share about this kind of stuff? I see Jennifer just popped her hand up there.
Yeah, I had a client that was a nail salon, and
there's never any funny business at nail salons. They're perfect.
She also played the English as a second language to her benefit. I know she was fluent in English, but yeah. The only revenue she recorded was anything that went through the debit machine. And then when I did her year end, she said, oh, what about tips? Like, we should write off my brother's accountant has, because he had a salon too, write off 20% for tips. And I said, like, honey, you don't ever give me any cash sales. Aren't you taking the tips out of cash? Because I'm sure that not 100% of those people who come in and get their nails done are paying through the debit machine. So anyway, I was happy when she decided she wanted to go somewhere else. I just said, good riddance.
Yeah.
And the other thing is, I had a guy who was doing his own bookkeeping, and when I got the books, it was quite a mess. And I brought that up before too. And he insisted he ran all the truck expenses through the company, and then he paid himself $6,000 a month for use of his truck. And I did the long-term math on that, and I said, you're not going to, you can't. You run all your gas and repairs through. And I said, and yeah, and $6,000. And he also tried to give himself live-out allowance, which he couldn't, which you're not actually allowed to do because he wasn't an employee. But yeah, anyway, I wasn't too happy to see him go either. So
yeah. Steve, did you have something?
Jonathan, I was curious because you kind of glossed over it, but you said, I don't ever want to report in court again or have to go to court. So that piqued my curiosity there, buddy.
Yeah, so that has happened in the past. That one client I was talking about with 2 sets of books and the ensuing lawsuit, I had to appear and be deposed, and it was not a fun experience. let's just say you definitely need a thick skin, because the first thing they're going to do is accuse you of not having any clue of what you're doing. So, yeah. And they have no clue what you do anyway. So they just try and make you look like a jerk. All right. This is the scariest one. This is my favorite of the backgrounds. It's just like so creepy. Nightmare clients. We've all had them. I'm sure we've talked about these a lot before. You know, these are the ones who are abusive. They ignore you and then they give you everything and want it all yesterday, but they don't even have all the paperwork. They're usually disorganized, frazzled, running around with their hair on fire, stressed out, rude. These are the ones that take 80% of your effort, but more importantly, 80% of your mental space. So the operative questions are, how much is your dignity worth? And it's okay to say no. Now, there were some things that I don't have on the slide, some stories I just like to kind of quickly go over. We did way back when I would accept anybody who could pay, who'd walk in the door. I worked with a mechanic shop, and, you know, the guy knew cars. He knew what he was doing. He did, like, you know, snowmobiles, ATVs, motorbikes, nice sports cars. Like, he was really good at that part of the business. We set him up. We had a great system going. And I was like, listen, man, this is what's going to happen. Your friends are going to want jobs, your girlfriend, your brother, whatever it might be. It's like, trust me on this. You need to have a clear reporting structure. Hire people you don't know. And then they'll look at you as the boss, not as whatever your existing relationship is. So the first thing he did was went out and hired his best friend and hired his girlfriend, who was then put in charge of their aspect of the bookkeeping. And, you know, or to add a little bit more context to this, the background that this person and his social network came from were not necessarily above board kind of people. So right off the bat, you know, best friend wanted to be paid in a certain amount on a T4, a certain amount in cash. The girlfriend wasn't doing her job with regards to submitting receipts and keeping things organized. When, you know, stuff did come in, there were some other things, and then the horror happened. We received indexed a suicide note. And by the time we got to the client, and like, this is me answering the phone at 6:30 in the morning, one of my team members freaking out about this. By the time we got to the client, the person was in the hospital and was recovering from attempting suicide. And so, like, I mean, really, I mean, how much did that weigh on my team member? How much did that weigh on me? And it's all because I said yes. All of that is because I said yes. I exposed this to this. This was totally my fault. So that's one of the worst nightmares. The other really big nightmare client was when I first started doing whatever it could be, was doing 10Qs and 10Ks for the SEC for a small publicly traded company, with an extremely abusive owner who, in the end, he kept trying to get me come in to do the next one, and he hadn't paid for the last one. And I was like, listen, I'm coming in, but I expect that check to be waiting for me. If it's not, I'm leaving. After 3 times, I said, listen, email transfer me this or we're done. And he said, come in, the check is ready, whatever. I show up, he's not there, the check's not there. And essentially I left a letter of resignation on his desk and I walked out. And then I got a letter from his lawyer threatening to sue me for $35 million for quitting. I was very lucky. I got involved. I purchased Legal Shield way back when. So I've always had a lawyer on retainer. So I just sent this to them. They sent a letter back and asked for a statement of claim, and it died on the vine. There was no grounds for that. That was just absolute bullying, trying to make me work for free. What ended up happening with this client is he abused his relationship so much with recruiters in the IT field, he could no longer get employees. He could no longer get people to work for him because no recruiter would work with him. And eventually the company just imploded. Anybody have any nightmares they want to share?
No, but you saved me. I've been racking my brain for days now trying to figure out Legal Shield. We had dealt with them before. And I couldn't for the life of me. I checked all my contacts, couldn't find it. So thank you, Jonathan. I remember them.
I know Tanya and I have both used them in the past. Tanya had a very negative experience where I've had positive experiences. So I think it really depends on the assigned law firm.
Yeah, and I absolutely agree with that. What I've ended up doing that I'm having better experience with is I'm using so CPB Canada. If you are a member, you can get your insurance through BMS services, I think, and they do an add-on. It's $30 a year, and I've got access to a lawyer, exact same thing as Legal Shield. I also have through CFIB. I've got through that. So what I'm doing is I'm going through these other avenues, and I'm actually able to get something that is valuable through there. But you're right, it all depends on the law firm. I could have had the wrong person on the wrong day.
Yeah.
But that's all it takes is for me to look for my other options that I've already got.
Okay, so CPB has that, and through the insurance, as does CFIB. I did not know.
Yes.
As does ProLink through CPA.
Okay.
But I just that one does not technically, you don't have a lawyer on call, but you have like a legal hotline you can call. So it's slightly different. But
And that's ProLink? Is that the one?
ProLink is an insurance broker.
Yeah.
They do the insurance for one of the ones who do the insurance for CPA. All right, let's get those CPD. What's your biggest fears when you're working with a new client?
All right, give me a sec here. Poll 2, relaunch poll. Okay. Can everybody vote?
Yes.
Got people voting. Perfect. Okay. So again, both polls must be answered in order to qualify for your CPD. Does not have to be the right answer because there is no right answer for this. It's subjective. So we've got 14, 2 more people to vote, 1 more person, and then we can close it. All right, 100% voted. We are going to end the poll and share.
Interesting. They want everything done now. Next, nothing. They'll end up being nightmare number 2. Interesting.
I like to
Go
share something that you guys can listen to afterwards. And Stacy Stanley Young found me that, and it's a little song, and it's called "It Costs That Much." And I'm just gonna look it up, and it basically it's meant for like artists, but it is us. So I'm gonna look that up and I'm gonna share that out, and then you guys can. Here it is. It's by, oh, look at that. It's by Whoa Dude. Whoa Dude.
This season, this
Okay.
everything you need
Oops.
to blow minds. Not budget.
Go away.
At up to 40% off.
Stop. Okay. So I'm sharing it right now. And I definitely say you guys definitely should give that a listen later.
Okay.
Yes.
Yeah, I think I remember this one. I'm going to just open it up on mine and just pause it. There we are.
It basically reconfirms that here's your 3 choices. You can only pick 2 out of 3. Do you want it good? Do you want it fast? Do you want it cheap? Right?
Yeah.
Yeah, it's kind of a backup to that. And so.
All right. So just a quick summary of the things we talked about. Absolutely do not do blind quotes. You're asking for trouble. Discourage equal partnerships as much as you can. 90% of the time, there'll be a problem. Ensure clear processes and roles and know who you're reporting to. Leave cooking for the kitchen, and it's okay to say no. Well, that brings us to the end. I've been dying to use a quote from Sun Tzu. If you know the enemy and you know yourself, you need not fear the results of 100 battles. In this context, I would say the enemy would be the prospective client.
Or
knowing
us,
and understanding what you're getting.
or our heart, when we think with our hearts and not with our minds.
Interesting.
We want to help everybody. We want to do this. We think that we're capable of changing them.
But
Right?
we have to triage.
Yeah.
Yes. Oh, I can change them. Yeah. How does that work?
Nope.
All right. Any questions, comments, further war stories that people would like to share?
Nope. All right. So learn from
right.
that. That's
Thank you
the
so much.
thing. Learn from that.
Session.
Thank
and
you.
you know, and we're not all in it alone. We've all got, I've got
Yes.
hundreds of stories I could have shared, but I didn't share because I always share and I'm being cognizant of time.
Yeah.
Yeah. All right.
All
Well,
right.
thank you so much, Jonathan. Everybody have a
As
great
always.
day. And we will see you all next month. And again, I will get this recording out. It'll be out by Saturday.
All right. And just I guess can we announce that there will not be one in December or January?
Right. Yeah.
Yeah.
December. We won't have one in December because Christmas, you always take that off. And then January, the very beginning of the call.
Yeah.
Don't know. Jonathan is going to be a dad. He is a dad to be, and it will fall within the first couple weeks, and he's going to be too tired.
I'm imagining. Yeah. I guess.
Yes.
Yes, he will be too tired. So we're canceling January. So December, there will be a November, then there will be a February.
Yeah.
Yeah, but I will send reminders out for all of that.
Awesome. Thanks,
Awesome.
everybody.
Okay, thanks everyone. Have a great day. all.
Thanks.
Okay,
Bye.
bye.